So we've been really focusing on efficiency out here where, 8 years ago we were drilling wells in, 30 days. Got that down to 20 days 4 years ago or so. And in the last year, our last four wells for 1 mile laterals, we got down to 12 days drilling. But for these mile-and-a-half laterals, it only took us 14 days. So we get an extra 50% of our productive interval with only 2 extra days of drilling.
Hello, you're watching Proactive. I'm joined by Wolf Regener. He's the CEO of Kolibri Global Energy. Wolf, it's very good to meet you. For viewers not familiar with the company, tell us a little bit about Kolibri and what you do.
We're an oil and gas exploration and production company. Our main asset is in Oklahoma. We produce mainly oil from shale. So we're about halfway between Dallas and Oklahoma City in Oklahoma. And we've got about 32 million barrels of proved reserves and 54 million barrels of proved and probable reserves. We're surrounded all by Exxon all around us. And yeah, we're shooting to produce about between 32 and 3,700 BOE a day on average for the 2024 year.
So this is all coming from the Tishomingo field, and that's in the Ardmore Basin in Oklahoma. Tell us a little bit more about the location that you're situated in.
Yeah, so we're in the Ardmore Basin. It's the southern part. If people know much about oil and gas in Oklahoma, there's the Scoop and Stack plays. We're in the lower part of what's called the Scoop play. As I mentioned, we're surrounded by Exxon, other operators to the northeast of us, northwest of us. And we've been developing this for a number of years. We originally developed what was called the Woodford Shale here, which was quite gassy. It was only about 15% oil when we were producing it. We sold that to Exxon back in 2013, but held on to the rights of this little shallower formation that we started completing, and they didn't want to pay us what we felt it was worth. And so I'm glad that we held on to that because that's what has generated this now. And that's why we have, 74% of our production now is oil coming out of this shale. So it's basically transformed us from a natural gas company into an oil and gas company, or more oil company, I should say.
I mean, Wolf, you touched on some of your production targets for the year. You were out with your second quarter results just over a month ago. Production for the quarter up 30%. Revenue up 38%. So maybe take us through what you're expecting on the financial side for the full year.
Yeah, so our revenue, we're expecting 57 to 62 million. That's the range that we've given so far. Our adjusted EBITDA, so how much we're making, is between 43 and 48 million is what we forecast. And that's on a capital expenditure side of things of 33 to 39 million. So we'll actually have some money left over. One of the things that we've done is over the years, we've been able to increase our EBITDA nicely. So we were at 6.5 million in EBITDA back in 2021. 2022, we had moved that up to about 25 million. 23, we've moved that up to 39 million. And so again, the forecast this year, nice growth from 43 to 48 million for the year. So with that extra earnings that we're getting out of the wells versus our CapEx is only 33 to 39 million, we'll actually have some money left over. And so we have just announced that we're looking to do some share buybacks that return some capital to shareholders now. We're just getting into that growth cash flow mode of the company.
Wolf, you also announced a couple of weeks ago that you finished drilling the first of 3 long lateral wells. Production that was from your fourth quarter production coming in. Tell us about those wells and why long lateral wells.
So thank you for asking that. We're up until now, these are all horizontal wells. So we drill down to between 8 and 10,000 feet, and then we turn the well laterally, and we've been drilling about 1 mile laterals. Now, these were our first wells that are a little bit longer than that. They're about 1.5 mile laterals. So we've been really focusing on efficiency out here where, 8 years ago, we were drilling wells in, 30 days. Got that down to 20 days 4 years ago or so. And in the last year, our last four wells for 1 mile laterals, we got down to 12 days drilling. That's just drilling and putting the casing in the ground, not completing the well. But for these 1.5 mile laterals, it only took us 14 days. So we get an extra 50% of our productive interval with only 2 extra days of drilling. So the more you can do quicker, costs you less money, is more efficient. So if we can get more out of the well for less money, we're making more money per barrel out of the ground, and thus we should be much more efficient, and the value of the property will go up too, hopefully.
Wolf, so what's next for Colibri?
We're currently in the process of completing these wells, these longer laterals that we just announced. There's 3 of those to go with the 32 wells that we have on production already from the existing field. Looking to evaluate that, see how much more economic that is. And then that should hopefully be reflected in our year-end reserve report, which puts our evaluation out again. And then next year, just keep drilling wells. And as I mentioned, we're getting more into a cash flow situation where we'll have excess cash, assuming oil prices do well still. But in this range, we can still make nice money here. And then we're going to evaluate how much more we start increasing it to grow the company further, or if we just do a small increase and then return more money to the shareholders.
Good news for the shareholders, Wolf. Thank you very much for speaking with us today. I hope you'll keep us posted on any progress you make.
Thank you very much. Appreciate your time.
Very welcome. Wolf Regener, he's the CEO of Colibri Global Energy.